In this video, I'm going to reveal actually three secrets of how to trade earnings. Now, as an options trader, it's actually quite a dangerous task. So here at MarketCrash.money, I have one simple rule that I follow at all times. I simply do not buy options before earnings. And I wanted to use this NVDA example, which today is May 10th and it just reported earnings. And clearly in this graph, you will notice what has happened. So initially, the stock went lower, then it spiked higher, then eventually settled so far at about 254 range. Well, let's take a look at how much the options were actually selling for. And then I'll give you the secret why I don't buy options before earnings. Okay, so let's plug in NVIDIA here. And if you really try to learn from this, when the market opens tomorrow, pull up NVIDIA option chain and you actually will be able to see what's going to take place. All right, so the options for NVIDIA we're selling, it went into the close at $260. So if you were bullish, let's say you were buying 260 calls, going into the close they were selling between 820 and 830 a contract. If you were buying 265 calls, there were 590 and 6. So when the market opens tomorrow, please take a look at what these options will actually be valued at. And what you will find out is it will show you two very simple things to observe what happens right after the earnings announcement. Number one, these options are going to worth probably 80 to 90% less than what they're currently worth. Number two, let's say you were extremely bearish on the stock and you thought it was trading at all-time highs, it was a perfect short. And let's say you went ahead and you shorted it. And let's say you bought the 255 puts, which were priced between 545 and 565. Or let's say you wanted to buy them in the money or right at the money at 260. They were priced at 775 and 8. Please, when the market opens tomorrow, pull up this option chain and see what these are actually going to be worth. What you will find out, as long as this price opens around the same range, maybe 255, 254, right around there, that regardless of whether you were bullish or bearish on the stock, you would have lost money. Well, how do you say it's possible? It did fall $5 so far, right? If I bought puts, why wouldn't I have made the money? Well, this puts, right going into the close, carried a significant premium. In other words, these options expire tomorrow, right? So 260 put realistically, if the price doesn't change, and let's say it's 255, the actual value of this put tomorrow is the difference between the strike price of 260 and the actual stock price tomorrow, which would be $5. Now, you would have ended up paying for them close to $8. So you would have lost money. Same situation here. If you would have bought the 255 puts for, let's say, an average price of $550, those are going to be worth tomorrow maybe $2, maybe $3. So you would have still lost 50% of your investment here. So unless the price opens significantly lower tomorrow, if all things being equal, it stays and trades in a tunnel of maybe 254 to 257, then your put options would have produced a loss. Your call options would have produced a loss. So this is why here at MarketCrash.money, we don't buy options before earnings. Again, the options are going to depreciate. It is simply a gamble because in a way you think you're betting just like on a roulette table. It's black or red. Well, guess what? When the stock practically doesn't move anywhere or move very little bit, like in this case of NVIDIA, you get in the situation where it's what's called in a roulette table a 0 or a double 0. In other words, if you would have bet on black or red and 0 or double 0 hit, you would have lost your money. So in stocks or options, this 0 or double 0 effect takes place when the stock basically does not go anywhere. So naturally, the options buyers or sellers, they expect the stock to move quite a bit after the earnings. When the move does not take place to the magnitude of the expected moves, both bulls and bears end up taking a loss. So knowing that information, you may be asking, okay, well, what is a good strategy then for trading earnings? And I'm going to give you two answers for that. So number one secret I just revealed to you, why we don't trade options right before earnings. Now I'm going to give you two strategies on how to actually trade earnings. Number one is a lot of companies, you will see they will run up going into the earnings expectations, as NVIDIA did. So knowing that NVIDIA was going to announce earnings, right? This earnings date was announced, a few weeks back. As you can see, it moved from 225 all the way to, at one point, well, this was after the hour section. It first moved to 264, but to 260. Here's a $35 move. So knowing the earnings date, some of these hot stocks, especially the FANG stocks, they have a tendency of running up higher going into the earnings report. Okay, so this is exactly what happened. So I've actually, and a lot of my students, we closed out our positions on NVIDIA when it was trading around 258. However, we were able to sell our options at a significant premium before NVIDIA actually announced the earnings. You will say, okay, but it could have gone higher by 20, 30 bucks and then you would have missed out. Sure. But more often than not, a strategy of actually buying calls on great companies before them actually announcing earnings and profiting on the rise in the stock price before the earnings is going to be more of a sure thing. Now, all we're trying to do as option traders is increase our probability of an outcome, okay? And simply, since it's not just a matter of being 50% correct or 50% wrong, as we've just identified, because there could be situations where the stock is not going to move in any direction, and then no matter whether you were right or wrong, especially for those of you that might have bought put options on NVIDIA, hoping that maybe is going to tank to 245 or 240 range. Now that it's not moving, it's quite painful because your options again depreciate. And even though you were correct about the direction of the stock, because it did, as of right now, drop $5, you end up taking a loss anyways. So to me, again, plain earnings, buying options, hoping that the stock is going to go your direction is just a simple gambling. Now I'm going to reveal to you the secret way of trading the earnings with a much higher probability. So as we clearly see, the current market reaction is, regardless of how great their earnings were, the stock pulled back $5. We're also going to observe this price action in the morning to see exactly what is taking place in the morning. There's a couple of variations. As a matter of fact, I've traded NVIDIA after the earnings many times. And many times on great earnings, the stock has fallen just to regain the momentum in a few days following the earnings announcement after the initial reaction lower. Now, the difference in actually buying calls tomorrow is I will be able to buy, if I decide to buy the call options tomorrow, at a significantly lower price than what they're priced at today. All things being equal, if it trades again around this 255 level in the morning, and I'm observing that every time it tries to fall lower, there's no sellers, it could actually bounce higher over the next few days. So I would be buying call options possibly after I observe the pre-market reaction and the trading range pre-market. Once I identify that, again, if it trades around this range right here, 255 to 56, I may consider buying 260 options for next week. Well, I'm going to be able to buy them significantly lower, the $260 calls, 260s. Today, going into the close, they were priced at roughly $10, which means for every contract I would have been spending $1,000. If NVIDIA opens tomorrow at a price of 255 to 56, chances are these contracts are going to be priced half of what they're priced today. So I'll be able to literally save 50% on every contract and enter the trade at a $5 range for every contract. Now, the importance of this is tomorrow I'm going to know exactly which range after announcing earnings NVIDIA is actually going to be trading at, which is going to help me pick a much better strike price, which is going to significantly increase my risks. Now let's say tomorrow, the second outcome is it's not trading at 254. What if it pulls back to, let's say, 252 or 250? In other words, when we wake up tomorrow morning, what if some other sellers decide to come in? Then I may want to consider playing it on the short side, okay? And yet, I'm going to be able to identify a much better strike price with a lot less risk in my trade buying the following week options, considering tomorrow is Friday. Now, if I want to get absolutely risky and I'm absolutely confident about the direction of the market today, knowing specific market move in combination in relation to the NVIDIA stock price action pre-market, I may be able to buy tomorrow puts at a huge, huge discount. So again, what does that give me? Actually waiting to see till the stock is reporting earnings. I'm going to be able to clearly identify how much of a move the stock is going to experience after the earnings. And opposed to the contrary belief right here, in case of NVIDIA, it didn't go up by much and it didn't fall by a lot. So tomorrow, I'm going to be able to get a much better deal on the options, regardless of whether I decide to buy put options tomorrow or call options tomorrow. I'm going to be able to at least buy them with a 50% discount in relation to what they were trading today. By having a much lower cost of entry, it's going to allow me to exit my positions with much greater flexibility. And that is the key. If you can control your cost of entry when you trade in options, you're going to be able to get in and out of your positions with much ease, and you're going to be able to be more correct about the direction of your trade opposed to buying them pre-earnings. If you would like to learn more about option strategies, if you would like to learn more about some of the successful rules that we have set up right here at marketcrash.money that help us trade options more predictably with a high probability of outcome and huge returns to the extent of 4, 5, 600%, I have actually put together a video where I go into great detail about how I turned $12,000 into $466,000 trade in option in just one day, and actually less than 7 hours. And I know, as crazy as it seems, it actually is true, and I would be fully providing you with every trade that I have taken that day. So if you're curious to find out how to get extraordinary results trading options, I am very confident the information in that video will bring some light and help you avoid a lot of errors. It will give you answers to some of the basic questions that you may be asking yourself as a trader on a day-to-day basis. I would like to invite you to visit marketcrash.money, click this big green button, How to Profit. If you're aspiring to get exceptional results in trading options, if you're a student of the financial markets, I promise you, you will be able to gain tremendous value from clicking right here on How to Profit and watching this comprehensive video in an interactive style where you will be asked a series of questions and you'll be able to take notes and actually utilizing that information when you trade call or put options, and whether you're trying to identify new opportunities in this ever-changing market environment. You will be able to learn the 5 core foundational principles which helped me turn $12K into $466,000 in under 7 hours. So if you're striving for greater results, this is your chance. Take action now. Click this button, How to Profit, and get the answers you've been looking for.